Did you know that understanding how to properly submit an FSA claim can literally put more money back in your pocket? It's completely true. Every single year, people leave their own hard-earned cash trapped in their accounts simply because the reimbursement process seems, well, too complicated. But not anymore. Welcome to This Explainer. Today, you're going to learn exactly how to maximize your FSA benefits with HealthEquity today, with actionable steps you absolutely can't afford to miss. I mean, think about it for a second. Are you leaving money behind? We're here today on a mission to rescue your trapped funds. Think of your flexible spending account as a piggy bank, right? But the IRS has slapped a giant padlock on it. Well, HealthEquity acts as the key to unlocking that money, and we're going to walk through exactly how to turn that key so you never forfeit a single dime of your own cash again.
All right, so here's our game plan for today. We'll start with an introduction to FSA and HealthEquity, then move into eligibility and plan documentation. After that, we'll cover submitting an FSA claim, followed by the approval process and direct deposit. Finally, we'll wrap up with maximizing benefits and management tips, and a quick conclusion and disclaimer. Let's get right to it.
Section 1. Introduction to FSA and HealthEquity, taking control of your funds. Okay, let's dive right in. The very first step to taking control of your funds is actually understanding the playing field we're on and the tools we've got at our disposal. A flexible spending account, or FSA, is this incredibly powerful tax-advantaged financial tool. It basically lets you put aside pre-tax dollars to manage your out-of-pocket healthcare or dependent care expenses. Now, because these are pre-tax dollars, the IRS heavily regulates exactly how they're spent, and that is where HealthEquity steps in. HealthEquity is the platform that simplifies this whole shebang, acting as the bridge between your expenses and your reimbursement. It makes things totally seamless, whether you're an absolute beginner or a seasoned pro. So the very first thing you absolutely got to do is get into your account. The online portal is quite literally your map to success here. You'll want to navigate to myhealthequity.com or maybe myenroll.com, depending on your specific employer setup, and just sign in with your user ID and password. Now, if it's your first time logging in, you might get prompted to link your employer plans. Once you're in, you're looking for the Claims and Payments tab. That tab, that is your command center for getting your cash back. Section 2. Eligibility and plan documentation, the rules of the game. All right, now that we know where to go, we really need to know the rules. Let's be honest, avoiding the massive pain of a denied claim starts entirely with understanding exactly what expenses and which dependents are actually eligible. What's really fascinating here is how distinctly different the rules are for dependent care versus healthcare FSAs. For a dependent care FSA, the funds can only be used for a tax-dependent child under the age of 13 or a dependent who is physically or mentally incapable of self-care. And here's the real kicker. The care must be provided during your work hours. Oh, and you can't pay your own older tax-dependent child, say your 19-year-old, to babysit. On the flip side, healthcare FSAs cover eligible medical services for dependents all the way up to age 26 or a qualifying relative who resides with you for more than half the year. If you take away nothing else from this explainer today, please remember this number: 5. This is the rule of 5, and it is absolutely the golden rule for IRS documentation requirements. Without these 5 specific pieces of information, your claim is going to hit a brick wall. So what are they? Every single receipt or document you submit must have these 5 data points. 1, the name of the provider. 2, the name of the patient. 3, a crystal clear description of the services. 4, the actual date of service. And pay close attention here, guys. The IRS cares about the date the service was provided, not just the date you actually paid the bill. And 5, the cost of the service. Interestingly enough, for paper healthcare claims, a provider's physical signature on the form can actually sometimes replace the need for separate proof of service. Pretty neat, right? The official HealthEquity claim filing requirements document brilliantly illustrates exactly what you need to look for in your own plan materials. Notice how prominently they feature that rule of 5 checklist. HealthEquity actually spells it out. Requests submitted without those 5 specific key data points simply cannot be processed. Period. Okay, we really need to debunk a massive myth right now, the idea that any receipt works. It doesn't. Literally, if you just grab the little credit card slip from the doctor's front desk, your claim will be denied. Credit card receipts and canceled checks do not contain the description of services or the patient's name, so they are a total no-go. To guarantee approval, your absolute best bet is always the explanation of benefits, or EOB, from your insurance company, or an itemized receipt directly from the provider. Section 3. Submitting an FSA claim, the execution. All right, we know the rules, we've got our valid documentation ready to go. Now, let's shift gears into the actual execution of the play. The absolutely crucial point here is that submitting online is the fastest, most error-free way to process your claims. You just log into your portal, hit that Claims and Payments tab we talked about earlier, type in the details of your claim, upload a nice, clear photo or scan of your documentation, and hit Submit. That's it. It's secure, it's instant, and honestly, there's a good reason the vast majority of participants choose the digital route.
Now, of course, we do have to acknowledge the traditional methods. You can still absolutely use the physical health equity reimbursement form. You can mail it or fax it to their P.O. box in Lexington, Kentucky. And hey, if you fax it, you don't even need a cover sheet. But fair warning here, relying on physical mail or fax is significantly slower than using the online portal, and it means you really have to hold on to your original receipts just in case something gets lost in transit.
Section 4. The approval process and direct deposit. Faster payouts.
Welcome to the optimization phase of our playbook. You've submitted your claim, but how quickly can you actually get your money back? Let's see how this builds into a beautifully speedy pipeline from submission to cash in your hand. If you submit online on day 1, HealthEquity generally takes about 2 business days to process the claim. By day 4, if it's approved, they initiate an electronic funds transfer, or EFT. And by day 5 or 6, meaning within just 24 to 48 hours of initiation, those funds are sitting right there in your bank account. It is incredibly efficient. Now consider the stark contrast here. If you don't set up direct deposit, you're opting for a paper check via mail. Not only does a paper check take 7 to 10 business days to arrive, which leaves you totally at the mercy of postal delays, but HealthEquity actually deducts a $2 fee from your reimbursement account just to print and mail the thing. Direct deposit, on the other hand, absolutely no fee, hits your account in 24 to 48 hours, and is completely secure. Setting up EFT in your portal is an absolute no-brainer.
Section 5. Maximizing benefits and management tips.
Okay, let's transition into some advanced strategies. Because FSAs operate on a super strict use-it-or-lose-it basis, you really need to know how to fully leverage these accounts before your funds expire at the end of your plan year. First things first, always check if your specific employer plan offers a grace period or a carryover for leftover funds, because not all of them do. But here's a surprising fact that a lot of people still don't realize. Thanks to rule changes made retroactive to January 1st, 2020, you no longer need a doctor's prescription to buy everyday over-the-counter items. Cold medicine, Advil, ibuprofen, menstrual care products, they are all fully eligible FSA expenses right off the shelf. To keep on top of all this, make sure you keep all your original receipts in a dedicated physical or digital folder so you're never scrambling when the deadline hits. And oh, here is a quick, totally crucial pro tip for that receipt folder. Put the highlighter down. Seriously. I know it's a natural instinct to want to highlight the specific cost or date on a really busy receipt to help the reviewer out. But using a highlighter actually causes the ink to black out completely when it goes through a fax machine or a digital scanner. It literally ruins the document, and it will get your claim denied.
Section 6. Conclusion and disclaimer.
As we begin to wrap things up, it really all comes down to accurate documentation and timely submissions. Just follow the rule of 5, submit your claims online, and set up your direct deposit to secure your reimbursements effortlessly. Oh, and I do need to provide a quick professional disclaimer here. The information we covered today is based on current HealthEquity policies and IRS guidelines. Because specific plan details, eligible expenses, and deadlines can vary widely by employer, and, they can update over time, always make sure to verify your exact rules with your employer's plan documents or your HR department. So, what does this all mean? Well, I have one final question for you. Are you ready to log into your portal today, audit those receipts, and claim your cash? Don't let your hard-earned money just sit there unused. Take 10 minutes today to set up your account and submit those pending receipts. If you have any questions at all about the process, drop them in the comments below. Thanks so much for joining me for this explainer, and happy claiming.